This is Larry Williams, and I'm really thrilled to be back on StockCharts.com because I want to show you what my indicators are telling us about stocks in China, because I think stocks in China are about to get body slammed. Oh my gosh, wait till you see what I have showing today. I'm going to show you some indicators you have not seen before, and we now have some of our indicators in StockCharts.com that you'll be able to access yourself. So I'm going to teach you how you can use those as well today. Well, the big tool that I have here is what I call my Uncle Sam index to forecast stock prices in China. As some of you know, I've spent a lot in China, went there first almost 30 years ago, 35 years ago. A lot of friends there. I've lectured a lot in China. And when I was there about 6 years ago, I noticed that there was a forecast put out by the United States government that you can use to forecast stock prices in China. And this thing has been just awesome beyond belief. I'll get to it in a moment. But first, let's look at cycles, because the Shanghai market has clearly well-defined cycles in it. You can see here, we're going all the way back to 2016, and we see about every 6 months we get a low in this market. And that's been pretty consistent. And highs also, selling points come about the same time period. Now, cycles are certainly not perfect in any way whatsoever. They are suggestive. And you can see as we bring these cycles forward to 2017 and 2018, we get the suggestion for a top, a rally, a sell-off again, a rally, a sell-off. Shanghai has been pretty reliable in terms of getting a broad view of the market based just on cycles. Now, currently the cycles are showing a cyclical low coming about the 15th of September. In other words, we should be going down about right here, right now. And that rally should take us up to about the 30th of November, and then we come right back down again. So that's what cycles are telling us. And of course, the market doesn't go straight down and straight up. What cycles tell us, oh, a buy point here, or shorten the market, cover your shorts, then put out shorts at the next cyclical high. So that's the way that we want to use cycles, to tell us when turns should come in the market, not necessarily the magnitude. The really strong dominant cycle in Shanghai has been about a 67-day cycle. You see it here in the charts. And look at when those lows have come in the market. You can see cycle low, rally, cycle low, we rally, cycle low, we rally. We see that's also coming up around the end of August, which suggests that August, cyclically speaking at least, for stocks in China, should be to the downside. And about half of that 67-day cycle, we can look at a 34-day cycle. That's going to be a lot shorter moves. You can see right where we are now. Coming up in the very first part of August, we bounce up for a few days in August and then come down into that September low point. So there's a cyclical aspect of what I think is going to be happening in terms of cycles in China. Cycles can be very helpful. Again, don't expect the market to go up and down like this, but they zones, time frames. To do these cycle studies, by the way, I'm using Timing Solutions software. You can go to the website, timingsolutionssoftware.com, and that's what I do my cycle studies in. It's been a really great tool I've enjoyed using. Well, in addition to cycles, we have seasonal factors in the market. I wrote the first book about seasonality and commodity prices way back in 1973. Since then, there's been a plethora of people writing about seasonals in the stock market and commodity markets, but nobody's got more experience with this than I do. I started this whole cottage industry of seasonals, and I did something wrong back then. So we have our true seasonal index now in StockCharts.com. You can see it here for Shanghai. I'll explain in a moment why I call it the true seasonal. And look what it says. Right about this time of year, stocks in China usually decline. Now notice that my cycle index doesn't look the same here as it does back here. The error that I made way back in 1973, we got the cyclical pattern. And if you can imagine, we have a cyclical pattern for here. And then we use that same current pattern, whatever it is now, back in time. But we didn't have this information when this cycle low was, or cycle high was formed. So our true seasonal pattern only shows the seasonality up to this point in time. Everybody else is using data from here to go all the way back to show what the seasonal would have been, but we have all the out of sample data. And it doesn't give you a true how you would have really traded back then because you didn't have this data. Well, we do this correctly now with our true seasonal indicator that is in StockCharts.com. You can apply it to, oh my gosh, just a whole lot of everything, individual stocks as well as futures. But the big point here, right now, the seasonal pattern in China is to the downside. So is that where stocks are headed? Or is there perhaps something else that might suggest that stocks could go up in China? That's a big question right now for people in China. And really, since what happens in China does have an influence on stocks in America, has an influence on stocks throughout the world. In fact, we need to pay attention to what's happening in China. One of the great tools I developed many years ago and is now in StockCharts.com is my valuation model. So we can find out, we're looking at the Shanghai index and notice we're overvalued in these zones. What great points to sell. Now, this is really interesting. Notice the market didn't rally much here at all. It certainly wasn't overbought, but it was overvalued. And then it got undervalued. So the valuation measure is not a technical aspect like a overbought, oversold, but it's actually looking at overvalued and undervalued situations in the market. So where is that right now? Where are we now and how good is this indicator being? Well, you can see going all the way back in time now to 2019, most all the significant sell-offs. Again, notice not much of a rally here, but very overvalued, and down we came to an undervalued reading and we rallied. These areas are really significant to help us tell we're close to a significant selling point in the market. And here we are right now. The last overvalued reading we saw was right at the first of the year, and of course stocks came down in China. You can see the other overvalued readings that we saw. Recently, we had an undervalued reading, but now look, oh my gosh, look at that. Let's focus where we are right here, right now. Stocks in China are overvalued. Now that starts to get interesting, doesn't it? Because we have a combination of tools, kind of like a recipe, a combination of ingredients. We have overvaluation. Remember, we saw cycles and we saw the seasonal pattern, all that are suggestive of about now we should look for and expect a decline in stocks in China. Well, this valuation model, as I said, is really interesting. Here's the exact same model applied to Costco. Costco has been a great big bull trend stock market, but look at this. It didn't pull back very much at the first of the year. Certainly wasn't very overbought in this big uptrend or oversold. And it was undervalued, just as it was undervalued back here. I am such a firm believer that fundamentals cause the markets to move from here to here. And the technical aspect is the emotional, the bouncing around all over the place. That's where technicals are really helpful once you have a direction based on fundamentals of the marketplace. Here's the overvalued market or index for Home Depot. You can see the same thing. Again, notice Home Depot didn't rally much here at all, but it was overvalued. So this is not just overbought, oversold. And right at the low, it was undervalued in the marketplace. So the valuation technique can be helpful for stock indexes, individual commodities, or as you see, for stocks themselves, which gives us a new dimension of finding the time to look for significant moves. This is not a timing index. It's something that tells us this is a value zone or an overvalued zone. That's really the beauty of the tool. Here it is for Apple. Apple was very undervalued back here. Recently was undervalued as well. So that's how we can use this tool to help us understand when we're in the zone, because long-term players, especially big money, like to buy value. And as short-term traders, we probably need to get in phase with that ourselves to be looking to be in phase with valuation in the market. Well, as I said, I first went to China over 30 years ago. My gosh, has it ever changed? I'm going to show you some of those changes. I actually did a television interview right in this building. I think maybe in the room over here. And there's the Pearl Tower. It is shocking how many people in China trade the markets. Here's just a few of my students in China. And then there's another one, another class. It's just unbelievable. The interesting thing about these students in China, I was lecturing there. There may be a couple thousand people in the room. And I know when I give a lecture, people are going to fall asleep, especially in the back row. So I walked around, as I usually do when I lecture. I walked into the back row to see how many people were sleeping, and they weren't. These Chinese people really want to learn. They are so focused on learning anything. And I thought, gee, that's interesting. I've put people to sleep in every other country, and I tried my best in China, but I just couldn't do it. These people are just so intent on learning, and especially about the market. Now, here's another thing. If you look closely, here's a young man next to me. Here I am. He's taller than I am, but the older people are shorter than I am. When I first went to China 30 some years ago, people came up to about my shoulders. And now the young kids are as tall as me or taller. The dynamics of China has changed. Our food supply has changed. There is a different, if you will, breed of people. The young people in China are just as tall as young people in America. Whereas it used to be when I was there, I would be one of the tallest people around. But that's really changed because their transportation system has changed. At one point years ago, I was in Beijing, and I think we had squash and watermelon. That's what we ate most all the time because that's what they grew there. They couldn't transport squash and watermelon to other parts of the country. So that's one of the huge changes in China. Well, because there are so many people following the Chinese market, we can measure sentiment in China. So we can tell from our sentiment indicator when too many people are too bullish. You see this green line? At this point, there are a lot of bulls in the market. And down here, everyone was bearish in the market. And you can see where we've been recently. The advisors and the public have been extremely bullish on stocks in China, and typically really bullish. We do see declines in the marketplace. Another kind of arrow on the target here that says, oh, we could have some problems in these Chinese stock market, that a condition is starting to develop here. So now we see there's too many bulls in the market. We can also use this index in StockCharts.com on individual stocks as well. Well, there's more students in China. And again, you can see they're just so intent on learning. They all take their iPhones and take pictures of everything with their iPhones. Well, here's the sentiment index on individual stocks. We just talked about that. Here's Home Depot at the recent lows. Home Depot, nobody wanted to buy it. The number of advisors or theoretical index of advisors, like none of the advisors saying buy here. They all want you to buy up here just before the market decline. And soon we'll be able to access this ourselves in StockCharts.com. So what we're seeing here is we're getting set up for a trade. We've got cyclical peak over valuation, too many people too bullish. But here's the clincher of this thing. This is what I'm really so excited to show you about, my Uncle Sam index. This is that index that I just literally stumbled across years ago when I was in China. And I've been using it now for 6, maybe 7 years. And oh my gosh, it has been so good. Sometimes I think like I'm just playing with the devil here. And some of the calls, you're going to see, I'm going to show you actual calls I did in the past. So you get a sense of, hey, this is an indicator that really works. We can trust this indicator. We all have indicators, and this is a great lesson about indicators. Some of these indicators kind of wobble all over the place, and so I can't really trust it. And if you can't really trust it, it's really hard to trade on these indicators because you don't have confidence. The big thing that you've got to be a trader is confidence. You don't have to have money. You can have a little bit of money to trade, but if you don't have confidence, you can have all the money in the world, but if you're not confident, you're not going to be able to trade. And that confidence isn't just an internal personal confidence. It's a confidence in the tools that you use. That's why you've got to be really careful of the tools that you use. I've done a show for StockCharts.com on indicator tools. You might want to reference that and see my ideas on that. Well, here it is. The red line that you see on this chart is a forecast for stocks in Shanghai, except notice this decline was predicted 3 months in advance of this peak. In other words, we knew this was going to happen 3 months back here. We were looking for a rally at this point 3 months back here. We knew that's what should be happening to stocks in China. Here it is recently. Notice that this point was known actually 3 months back here. This was a decline we were just looking at, right? And this point where we would expect stocks in China to go down was known while stocks were rallying, but that was known 3 months back. In other words, we knew this should happen back in this time period. 3 months prior to it happening, we had a lead time. I'm going to show you this lead time in a moment so you can see how these lead times work. But again, I want to talk about projections from the past so you can see. We talked about cycles earlier, right? Well, here was a cycle projection I did for the news agencies in China. In 2019, predicted a low about the first part of August. And the Uncle Sam index, which you see right here, see how this is projected in advance? See that? So this point is known back here 3 months in advance. Oh, look at this. We should have a low in China. We knew that. We should have a low about August. So prices tend to follow this line, or they don't. So let's look in the future and see, did prices follow this line? This is from an actual forecast I issued for the Chinese news agencies. And this was August right here. That's when we were looking for the cyclical low and when we were looking for the Uncle Sam index low. So you can see that this stuff does have a lot of ability to forecast. Now here it is again, and you can see this is another forecast I did earlier this year for China. Again, the Chinese news agencies, and I'm going to tell you an interesting story about that in just a moment. But you can see how the black line, stocks in China, follow the red line. So right now, as I wrote this report, I said, expect a big rally in prices in China, right? We should expect that because look what the Uncle Sam index is saying right here, right now, straight up in China. So how did that turn out? Well, there it is. There's the red line. And there's what happened to stocks in China. And this is what that little red line, the Uncle Sam index, is suggesting should happen now, that we should start to go down. So we have a lot of stuff. We have the fundamental forecast from the United States government says stocks are ready to go down in China. We have the cycle forecast. We have the overvaluation model. We have the seasonal model. And we have the advisors really bullish in China. So guys and gals, I think we're probably getting somewhere close to a selling point for stocks in China. So especially thanks to the Uncle Sam index, this has just been a great tool to use in the market. I also like to see what the professionals are doing in the marketplace. So the professionals, buyers, are they sellers? We've been able to determine how professionals buy and sell in the market because my study based on the commitment to trader report in America, where we know how funds buy commodities, well, stocks buy the same way. And we've developed a way of measuring their buying. You can see they were buying right here in China, and they were buying here, and they were selling over here. They were also selling at that big peak in 2015. So if we look to see what professionals are doing, and I really like to do that with our money flow index, we can see that they were heavy sellers at the first of 2019. And before this recent big rally we had, remember that the Uncle Sam index was predicting this rally 3 months in advance. Look what the bullish guys were doing. The fund money flow index, the funds were buying. That's how this stuff comes together, coalesces like, oh, yeah, we're at a seasonal low. The Uncle Sam index is forecasting higher prices, and funds in China have begun buying. So we would expect it to rally. And now look where they are. They've begun a selling program. Here's the same indicator for Google. You can use how the funds buy stocks in America is no different than how they buy stocks in China. You can see they were buying Google down here. They were buying Google here. They're close to being very bullish Google here. And recently they moved to the sell side and Google has started to come down, just as it did back here when they were starting to sell Google. What a great index. And that will now be, I'm going to talk about that in a moment, in the StockCharts.com. A panda bear. Let me tell you, there are only panda bears in China. What do I mean by that? This is what I mean by that. I can't tell you how many times I've had sell signals in China, and I give them to my guys there, and they come back and say, oh, Larry, the government won't publish that. I can't get the government agencies, because they control the media there in China, they can't do anything bearish. They're never going to let you know stocks might go down. So I call them panda bears. These little cuddly bears that look so nice, right? But you can't get bearish in China. You can't get published. So I came to StockCharts.com because I've got a sell signal for stocks in China, and I know they won't publish it in China. But God bless America. We can still publish stuff like this here. And so I wanted to share with my many subscribers and followers on StockCharts.com my take here on China, not only the market itself, but kind of the inner workings of how things have changed in China. And this is such an interesting twist that you can't get bearish in China. You can just be a little cuddly panda bear. Well, I've also noticed that South Korea has a lot of unity with China. You could almost say that as goes China, so goes South Korea. And you can see the South Korean stock index here called the Kospi. At one point, this was the most actively traded stock index in the world. And very few people in America traded or even knew about it. It was traded heavily by everybody in Korea. It was like a bubble. Everybody in Korea, from shoe shine boys to housewives, they called the housewives hens. Oh, the hens are out buying today. They were buying the Kospi. And the Kospi also works pretty well with our sense of this. This is the money flow index. The funds start buying the Kospi at rallies. When they start to sell, it declines. And recently they were buying the Kospi. While at the same time, recently they've started to sell the Kospi. As they were back here, they were sellers. So potential that perhaps we're going to see some lower prices in South Korea. We also can bring in the seasonal pattern from StockCharts.com, and we see just about now the seasonal pattern for stocks in South Korea is to go down. So again, notice how this is how I trade. This is how I get some pretty nice winning trades. I don't just look at one indicator. I don't look at just a band here, a moving average here. I like to get these conditions that come together that tell me we should be close to a significant up move in the market. And here it is, the Uncle Sam index for stocks in South Korea. Yeah, again, you can see this beautiful 3-month lead time. In other words, this line is known in advance. This low was known in advance by 3 months. We knew to expect a rally in the Kospi 3 months back. We expected a decline to start about here and a rally to start like this. Well, you look at it, what's it telling us right now? It's telling us we should start to decline. So this, combined with the other indicators that I've mentioned to you, is why I think that stocks in China are about to get body slammed, that we're going to see a decline for stocks in China. And the big consideration, because most people here don't follow stocks in China, a few people do, but not a lot, is what does that mean for stocks in America? Does that have an impact on stocks in the US? And I've got to tell you, I don't know for sure. At times it looks like there's some correlation, at other times there isn't. The only really strong correlation I've been able to see is usually stocks throughout the world get body slammed together. But at times we've seen China go down and the US not go down. So my suspicion of how this is going to play out in the United States is that we'll see some temporary weakness here in the US and probably much larger weakness, more weakness in China, and then a buy point come into stocks in the US, and China stocks will probably continue going lower, or they're going to follow. And it's going to be easy, just follow the index, follow the Uncle Sam index. As long as this line is going down, well, we're going to still see lower prices. Now, if this starts to turn up, and May, I don't know, but if it starts to turn up in here, then we could be looking for a very strong market in China. We'll have to revisit that in a couple of months from now. We'll have an idea if this turns up. That may be, there's a little bit of a suggestion here, nothing that we'd want to trade on yet or even think about, but if this index starts to turn up based on the Federal Reserve data, we could be seeing a buy point in China in a couple, 3 months from now. So that's the perspective we have. Isn't that nice to have a long-term view of the market based on, market follows this pretty closely. Here's the bad news. I have not been able to find any indicator similar to this for stocks in America. Oh boy, have I looked, let me tell you. I've read everything the Federal Reserve has printed and I can't find it, but I did find this there, if you will, forecast for stocks in China, which is why I think they're going to get body slam for stocks in China. So you've seen some of my indicators, and we're going to have those. My indicators now ready for prime time. And let me tell you, StockCharts.com is prime time television for anybody that's in stocks, and stock indexes, and options, and in futures. So stay tuned. We're going to have my stock charts and ACP plugin coming soon. You'll see an announcement on that, so you'll be able to access these tools that I developed over the years. I think you're going to really enjoy that. You'll be able to do exactly what I've done here. You're going to say, oh, look at what's a seasonal pattern for your stock. What are the funds doing in your stocks? And be able to just go through what are the professionals doing. Looking at Google, well, clearly you want to know what the professionals are doing. When they're selling your stock, you better be careful. And when they're buying, you can start to accumulate the stocks. So we're going to have that for you in StockCharts.com. I'm really excited about that. I think that's going to be just a special program. So as I said, get ready for stocks in China to get body slammed, and stay tuned because we're going to have our Stock Charts plugin coming soon. You'll hear more about that. But the big news, I think, right now, get ready to see stocks in Asia move to the downside. I hope you've enjoyed today's presentation. As always, if you put a thumbs up on the YouTube video, please do that. If you don't like it, hey, put a thumbs down, write a comment in there because I do read those comments. If you have questions or you don't understand something, write a comment in there because I do visit those from time to time and I will reply to you because I am interested in getting feedback because that's the only way I can get better at this if I get feedback from you. So positive or negative, go right in there when this is posted on YouTube and write whatever you want. And let's see if we can't all work together.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.